Bill here with the Metals Minute. Today's Wednesday, May 22nd, 2024. Have another discussion today on part 2 of Is Silver a Good Long-Term Investment? And before we do that, just a brief highlight of the numbers. It's been another up week for the monetary metals, gold and silver pulling ahead again, gold just a fraction, silver up another 6%. And so we see over the 1 year time, silver is pulling ahead of gold. We have gold up a solid 22% in 1 year's time. Silver's up 33%. And so let's talk about why that is. Part of the reason has to do with what's known as the gold-silver ratio. And this is a tool, an important tool you can use, not only when deciding which metal to purchase, but also which metal to sell, if and when you need to sell some metal. So let's talk about it. The gold and silver ratio is simply a number that compares how many ounces of silver it will take to purchase an ounce of gold at any given time. So looking back over history, we see that the low point for the gold-silver ratio was 14.01. And that means it took 14 ounces of silver to purchase an ounce of gold. On the other extreme, which happened in 2020, the gold-silver ratio was 125 point something. The graph, I'll include the graph, and it gives you the exact number there. But it took over 125 ounces of silver to equal an ounce of gold. So the higher that number is, the more advantageous it would be to purchase silver over gold. So for example, if you purchased gold and silver when that ratio was at 14, your gold has outperformed the silver since then. But let's say you went back to March 17th of 2020 when the gold-silver ratio reached a peak of just over 125 ounces of silver for an ounce of gold. You'd have been far better off to purchase silver at that time, because since then gold has increased. In about 4.2 years, gold's up about 58%, and that's not bad. But silver, purchased at that same time, is up over 153%. So, 2.5 times better, the performance of silver. So when the higher that number is, the better time it is to either purchase or sell. Actually, it gives you have to think of that in the reverse sense. When it's that high, then it's a good time to sell gold if you have to sell something. And what sometimes people do is they'll sell a little gold when that ratio gets high and put that money back into more ounces of silver. And conversely, when that ratio gets really low, they may sell a few ounces of silver and purchase more gold and keep their portfolio growing. So that's a good ratio to keep an eye on. Right now it's at 77. And as we look back over the past 50 years, we can see that the gold-silver ratio spent a lot more time below where it is now than it did above. So when we see that ratio get down into about the middle 60s, that's a good kind of a even Steven point where, it really isn't that much more advantageous to purchase gold or silver. Either one will probably perform relatively similar. But when it's over, it's more advantageous to purchase silver. And that's where we continue to be today. Hope this has helped you. I believe it will if you'll use that as a tool in your toolbox over time. Thank you for tuning in. We look forward to seeing you again soon. God bless.